Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We are in the midst. This must be one of the busiest earnings, definitely one of the busiest earnings weeks of the season. Maybe one of the busiest earning days of this entire season. We had Google. We had Whirlpool, Steel Dynamics, TD Ameritrade. We've had JetBlue report, Verizon, 3M, Biogen, Eli Lilly, KMB, UTX. We're going to try to cover as many of these earnings reports as we can over the course of the next hour. There is some other news. I hope we'll be able to get to as much of it as we are able to, but a lot to cover this morning. Our guest is at 8:15 will be Jonathan Corpina. He is the senior managing partner at Meridian Equity Partners. He'll break down some of the biggest morning movers for us. I've got a chart up of the spiders up on the screen. Joel, tell us what's happening overnight.
I mean, Dennis talks about good days to report and bad days to report. This is a great day to report. Google leading the way. S&P's making a new high for the move here. Former high of the move was 27.18 a quarter. We are trading above that. Folks, we got no resistance here for 20 handles on the upside. I don't know if we're going to do it today, but certainly opening up into our February 2nd high of 28.3975. Crude's in the green by 42 cents here at 68.31. Silver up a dime at 15.54. Gold up $1.80 at 12.2740. And Bitcoin, that is the Bitcoin futures, are up $535 at 83.20, on their way to 10,000. Dennis, are you buying more Bitcoin?
It should be.
No.
I'm not a crypto trader, though, so I'm not even going to talk about it. But
not even GBTC? You won't even trade the GBTC?
No, that's crypto. That's all just crypto, following crypto. I'm just not a crypto trader. Got to stick to what you know. If you learn anything from this show,
it's a stock,
to what you know.
though. It's a stock. It's an ETF.
It's not a stock. It's over the counter. I don't trade over the counter stocks either because the liquidity's not there. I mean, maybe it is on something like GBTC, but you can't trade everything. I mean, unless you're totally algorithmic, I guess you can. Then if you're Citadel, I guess you can trade everything. If you're Goldman Sachs, maybe you can trade everything. I am not, so okay. I'm going to stick with what I know. I know nothing about Bitcoin. I'm not a believer long term, so I'm not invested in it, and I'm not trading it because I don't follow it close enough. Although I feel like we did a pretty good job calling that 6,000 bottom.
I'm not going to ask you anymore then. I'm not going to ask you anymore about it. Where do you want to go with these reports? You want to start with the Googster?
Might as well start with the big one of them all. I mean, there's so many big earnings reports, but this is the one that is driving everything. Spencer Israel, how did the GOOG monster do?
Yeah, the Q2 adjusted EPS on Google, $11.75 versus a $9.59 estimate. Revenue $32.66 billion versus $32.17 billion. This is again adjusted for the tax payment they got charged by the EU, and just kind of goes to show that same thing we saw with Facebook is they may get hit with fines this way or that way or regulation or whatever, but it doesn't really affect the core business. We know that advertising continues to make up the bulk of their revenue. It did make up $28 billion of their revenue in the second quarter, but they did see growth in the other revenues category that includes the cloud business and hardware sales and things of that nature. That revenue hit $4.4 billion in the quarter, or a 36% year-over-year increase. So a lot of good news here for Google.
Everybody hated it after last quarter. Everybody in the media was beating on the stock. And you know what? And we were saying it on the show. If you rewind it, I was like, it was a pretty good quarter. They just were, just feeling like selling off good stocks on good earnings reports. But there was nothing wrong with their last quarter. when the stock sold off to $50. It got down and kissed and played around with $1,000 forever there. If you look at the GOOGL, if you look at the GOOG chart, obviously similar, playing around with $1,000. Both stocks have actually, it's funny that spreads come in. Remember, it used to be like 20, 30 points out. It's only like 7, 8 points out now. So I guess you can just talk with them in tandem here now, because the risks or the spread arbs there on the GOOG versus the Google kind of brought it in over the course of the last year. But I mean, I liked it then. I've liked Google the whole time. I've owned it in my investment portfolio for the better part of a decade. It's been one of my best stocks. I'm holding it forever. I do believe, I've said this a lot of times on the show if you've been listening to it for a while, I do believe that Google will eventually be the most valuable company in the world. It's kissed it a couple times. I know Apple's ahead of it, but I think in the long run, I think Google is the most valuable company in the world. Love the company. Buyer of all pullbacks, but I already own it anyway. So if I didn't own it, I would be a buyer of all pullbacks, not chasing them.
Okay, just from a technical standpoint, we'll just give you the quick pre-market pops, the highs. They can be targets on the day if you so please. In the GOOG, no L, the high was 1274.95, and the GOOG with the L, that's going to be a little bit higher than that. That high was 1285.84. And just kind of quiet consolidation now here on the 15-minute chart. Buyers and sellers digesting information. There's some targets on the upside. If you're trying to buy these things today, you'll have to consult with Dennis, because I don't know where you'd have to maybe get a 1 or a 5 or 10-minute chart out to find support here. But
it's new all-time highs. I mean,
yeah.
In this market, it has not paid to chase. So that is just the warning. Could it go up 60, 70? Sure. It seems like they always give you a second chance for whatever reason. We've just been in this market that it hasn't paid to chase. It's been more of a paid to fade the moves. But I like this company so much. I'm absolutely not shorting it, just because it's just been a monster. I mean, maybe as a day trade, if you can see a red candle happen, you can see a little whoosh like we talk about on the show. Maybe then potentially, you could look at, fading a move here. But I mean, it's just been such a great performer over the course of the last decade. Even I think I can't remember when I bought this originally. I feel like it was like it did the fun. It was before this. They split into 2 companies. And I feel like it was back maybe just after the financial crisis. I'm going to say 2011 or 2012. So, and then it gave you 2 companies. I was in from 500, but then they split into 2 companies. So if you add both of them up, it's 2,500 now. So in any regard here, I'm up, basically 400% since I bought it. And I think maybe 2012 is when I bought it, 2012 or 2013.
What do you think? What do you think this does on the old $1 trillion market cap race here? I know Apple was in the lead. Amazon's up there.
Apple's so
Facebook.
close, though. Are you going to stop them? They're right there. I mean, what is the race, Spencer? Do you have it in front of you by any chance? Can you bring it up?
In terms of
I know Apple's the leader. How far are they off, though? They're not that far away. Yeah, it's 203 or something, I think is the magic number.
Remember the price at Apple was 203.75 or something of that nature.
Yeah. So where's Google now? It's got to go another 10% from here now.
I'm not sure.
Are you going to make me dig in my parents here?
Dig in, because it's a race. I mean, I think Apple's got it probably, but I think Google long run. I mean, these are all a great company.
Okay.
Amazon's up there. Give it to us.
All right. This is as of Friday. Apple was at 941.
Yeah.
Amazon was at 880. And Alphabet was at 827. And this was as of Friday.
Alphabet's going up another 4 or 5% here today.
Yeah.
So I don't know how you do. Can you do their math on that?
Well, 10% would be 800. Be 800 million. So half of that. So it's still going to be shy. Apple's knocking on the door too, and then
I think Apple's just got too much of a lead. I think they're going to win the race to $1 trillion. I think in the long run, I own them both. I own Apple and Google. I think those value tech stocks got you talk about AI and stuff like that. I mean, on this conference call for Google, they're talking about AI all over the place. Everybody just thinks, it's a search engine, and that is the bulk of the revenue. But holy cow, they're doing so many other things, coming up with so many different products all the time. They are geniuses over there. And they are at Apple too. I mean, and Facebook and Amazon. I mean, I guess that's why you can't go wrong owning all these companies. I mean, from a valuation perspective, Apple has always been the cheapest. Google has always been fairly cheap too, though. So like you net out the cash and you start looking at a forward multiple. I think it's still trading under 20 times and it's growing revenue like crazy still. So I love the company. Love everything.
Okay, what's the next report? Let's move on from Google.
Let's go to
enough
Eli
Google
Lilly.
love.
Let's go to Eli Lilly. They're doing a spinoff. They give us the numbers. I never even looked at the numbers. I was just looking at the spinoff.
Okay.
What's the numbers here, Lilly?
The numbers for LLY Q2 EPS of $1.50 versus a $1.30 estimate. Sales of 6.36 versus 6.05 billion dollars. They raised their fiscal year adjusted EPS outlook by 30 cents on the low end of the range from $5.10 to $5.40, also raising the fiscal year sales outlook from $23.7 billion to $24 billion, also on the low end of the range. And you mentioned the spinoff. They're separating their animal health unit with an IPO. And I don't know, that should be this, they said, the second half of 2018.
That was rumored before, so it isn't out of the blue that the spinoff coming. They had talked about this, but now it's official. So I guess you're a Lilly shareholder, you're going to get another company. That's always fun to do. I think that's at least how they're doing it. And the stock's trading up. Now it is significantly off the highs, which is somewhat concerning. I looked at this with a 94 handle. I thought I saw. Maybe I was dreaming that up, but it's a 91 handle. Where did it get to?
Oh man, 94.75.
Yeah, wowzers. That's chasing. And if you're chasing this morning, you're getting punished for that chasing. We're significantly coming off the high. So I'll go on a limb here, Joe, and I'll propose the bet to you. I think the high of the day is in.
You're not going to get me a thick stock like Lilly here. Breaking out. What are we breaking out? Well over the former all-time high. Actually, it wasn't 90.13. Where was this pesky high? 92.85. That's my bogey, and it will be my bogey for the remainder of the day. Who cares about that 94.75 print? Your former all-time high in Lilly was made in November of 2015 at 92.85. I won't say former because it hasn't been taken out in regular session. That's my number. If you rally right near a whole number like 93.
It took a long time to come back. When did it make that? When did it make like the highs up in the? No, you know what? Go back. Wasn't this like 105?
Oh, Dennis, you get me.
I remember a 105. The memory on me. Look at that.
Look at this.
Wasn't it like a 105? Go further back.
Oh, you're right. You're right. Actually, there's a 108.94 print.
What year was that?
A 109 print in June of 2016.
No, not June of 2016, in June of 2006.
June of 2000. No, 2000.
So 18 years ago, if you were buying stocks with crazy valuations back in the tech bubble, you were 18 years later on Lilly now, you still don't have your money back. There's so many stocks that were like that. Some did come back, some never came back. Some have come back. I mean, GE, the high back in 2000 was like $60. And it's like, what, 12 or 13 here now. I mean, this is why valuation does matter, guys, in your long-term investment portfolio. So when you're going in there and the growth slows and you're buying stocks with PEs of 100 or 200 and the growth slows, you could be stuck in those a long time to get your money back and you may never get it back. So that's why I like to buy stocks with reasonable valuations. I like the growth. And that's why I like a stock like Google, but at least I'm buying with a reasonable valuation. Not like a Netflix that I'm buying something that is trading 200 times earnings or even more in some cases. Or in some cases, if they don't make money, you can't even calculate a PE multiple because it gives that old doesn't make sense thing because it doesn't make money. So there is no PE. But I mean, you look at the forward earnings, you look at the potential. Sometimes it pays to buy companies that don't make money if you know there's a lot of potential down the road. But think about where the potential can take you. And then think about, what you're paying, because valuation in the long run does matter. Eli Lilly, I remember back then, was trading for 60 or 70 times earnings. Everything was. It made no sense. When Walmart was trading with a PE of 50, it made no sense. That was the bubble of all bubbles. You don't have this market right now. You have lots of stocks trading with reasonable valuations. But like I said, and I had the rant a couple days ago, I do believe there's bubbles in select stocks. And those are the ones that I don't want in my long-term investment portfolio. Will I trade them? Absolutely. Well, you can, go swing trades, have yourself an out, don't get stuck in something saying, oh, well, it always comes back, because sometimes they don't have to come back. And Eli Lilly, if you bought it back in 2000, you were still waiting to get your money back 18 years later.
The old growth at a reasonable price trick. All right.
Love it.
8:15.
The GARP.
Yeah.
We're all about the GARP here.
We're going to take a quick GARPing break and grab Jonathan Corpina. He's the Senior Managing Partner at Meridian Equity Partners. We're going to talk to him live from the floor of the NYSE. We'll be right back in a moment with Jonathan. Welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, and Dennis Dick, now joined by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Jonathan, how's it going this morning?
Gentlemen, good morning. Nice to talk to you.
Nice to talk to you. Let's just get your thoughts on a lot of earnings yesterday after the bell and this morning. What jumped out to you the most?
You know, there's always a lot to look at. It's so exciting earnings season, and you got to kind of try to put your finger on one thing here. Listen, when you get Google reports that come out and the way that they do and the way they historically do, it's obviously something that we all look on and focus on. You know, the numbers across the board were strong, and I think it just adds to the investor confidence in that overall sector. And the overall performance of Google. It's one of these runaway trains that has continued to move higher and higher over time. And it gets to a point where investors might sometimes feel a little too scared of the price. But overall, if you look at it, it is a tremendously performing stock.
Anything that concerned you, if not yesterday, then the past couple of weeks, from the last week or so, as far as earnings?
Not too much. I think part of it has been managing expectations, and I think analysts have done a pretty good job of lowering that bar. And when you're in earnings season, there's kind of two pages to it. One is it's a look back as to what's happened over the last quarter, and I think what's kind of most important is to look forward, right? What they say on the calls, what their take is on the different hot topics that have been out there, whether companies have been affected by trade, whether they've been affected by tax reform, whether they've been affected by fluctuation in currency prices, oil prices. So I think it's more of the outlook moving forward. That is something that we really focus on. And I think, even though we are halfway into the year and, we've a lot has happened over the last 6 months, I think companies are still trying to navigate this new tax reform as to what came in place at the beginning of the year and what's going to happen with interest rates moving forward. So I think they've been treading somewhat lightly as far as what their real expectations and outlook is moving forward. So what investors want is information and transparency. I'm not implying that companies are not being transparent. I just think that at this point, it's still a little too early for them to really tip their hat as to where they really think we're going to be in the next quarter or 2 quarters.
And, it's interesting because, the tax breaks are kicking in this quarter and the upcoming quarters. And really the only thing that's kind of spooked the market, it hasn't much as of late, has been the tariffs talk. And that's limited to, really some specific companies here. I mean, if you're looking something to derail this bull market, doesn't seem like it's going to be the tariffs. We have that, and then we bounce right back. Do you see any chinks in the armor in this market besides the potential effect of tariffs and rising interest rates?
I think tariffs is going to be the catalyst that's here, and I fully agree with what you say. We've had tariff headlines that have moved the markets, and then the next day the markets rebound and come right back. And there's been other days when we have headlines in tariffs and the market doesn't even react to it. So I think we've become a little bit complacent with that headline, and I think that's something that is concerning to me. Clearly, we've seen President Trump flex his muscles. We've seen China come back. We've seen Canada make comments. We've seen many different countries come back and try to stand up to this. It's going to be very interesting to see how this plays out, because from what we're seeing now out of Washington, President Trump has pretty much dug his heels in the sand. And anytime somebody steps back up to him, he digs them even further. So I think if we get into a point where, the United States holds their ground firm and China holds their ground firm, and we cannot find some sort of middle ground there, the market is not going to be able to absorb that type of ramifications, whether it's in, the auto industry or the, aluminum and steel industry. However it is affected, and the ripple effects will certainly cross against many sectors. I don't think we're fully taking into effect the complete implications of an all-out trade war.
What about some of these stocks? Like we were just pulling up Eli Lilly, still not back to its all-time high from 2000. Looking at stocks and valuations and stuff. I mean, this market, it certainly hasn't paid. You look at stocks like GM and Ford, and you're still waiting for them to come back. It just seems like this market is so predicated on just riding the winners here. Do you have any, one or two laggards besides, stocks with a dividend that, maybe will play catch up to the overall market?
Kind of tough for me to discuss, fully individual thoughts on that. But I will say, if you look at the financial sector over the last, 3-6 months, that's one that has clearly been lagging behind. And little by little, it's starting to pick its head back up again. I think that's something that's important to look at. And I think that also ties back into what we were discussing before about tax reform and interest rates. These financial companies have chartered this water, and they're working their way through it. I think people have become much more comfortable with the transparency and the regulatory aspect of the financial sector, and I think we're going to continue to see that move higher here. Yes, earnings season does help that area and that sector, and we have seen it. But if you look at the financials, they've been down 5-6% over the last 6 months, and they're starting to peek their head back up again. I think that's something that investors should keep their eye on.
Jonathan, let's move away from equities just for a second. Let's go on to the crypto talk. Bitcoin has had quite the rally here in the last few weeks. Your institutional traders, are they getting excited about this now? What's your thoughts here on Bitcoin, and what's the institutional traders saying? Are they starting to get excited about this? Because there seemed to be a lack of interest for a long time. But as price starts to go up, people start to get interested again. What are your thoughts on Bitcoin and crypto as a whole?
If you asked me this question 6 months ago or 9 months ago, my answer would probably be the same, but I'm kind of turning the corner a little bit. It's a very unregulated market. It's an unknown market. It's not very transparent, and it's very difficult, I think, for many people to wrap their hands around. And I still feel that same way. That being said, over the last 6 to 9 months, we've seen more cryptocurrencies pop up. We've seen more cryptocurrency exchanges pop up. We've seen some pretty significant senior executive moves from your kind of plain vanilla companies to crypto exchanges and crypto companies, and whether it ties into currencies or whether it ties into ticket brokerage or how blockchain companies are going to be used and put into effect moving forward, I think people are becoming a little bit more complacent with it. And then I say that in a good way. I think they're starting to say, the roots have been planted. It doesn't seem like it's going anywhere. So let me kind of, open the book and pay a little bit more attention to it. The thing that does concern me in this overall area is the regulatory aspect to it. We as institutional traders are so programmed in our heads as far as, rules and regulations and what FINRA and the SEC and pretty clear black and white rules that we have to follow by. When you look into a product like cryptocurrency, where it's very gray, I think that's where the institutional trader might step back a little bit and say, let's wait to see how regulatory arms wrap themselves around this and what that landscape is going to look like moving forward. But as of now, we've seen some clear volatility in that area, and in the pricing there seems to pick its head back up again here. And, if we start to see some stability there, I think that's when investors will feel a little bit more comfortable with the overall macro concept of cryptocurrencies.
We're on the line with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. I just want to talk general crude oil market here. We had that nice pop-up over $75, a little bit of a pullback here. Article in Barron's about $100 crude by the end of the year based on supply and demand. I just wanted to get your overall take on the crude oil market. And then, also we get questions about, Schlumberger or Halliburton. I mean, if these stocks have not rallied with the move that we've had in oil, are they ever going to rally?
Yeah, and even you look at something like Exxon. We've seen oil prices continue to drift higher. We were looking back a year ago, we were in a tight range down in the high 40s, low 50s, and we've seemed to move higher. What we see is this push and pull with OPEC and Middle Eastern countries as far as production, input, and output. And anytime we see price values in oil shift a little too far outside of a range, OPEC will come out and make a statement saying that they're going to cut down on production, or they're going to take the other side to that and say, we want to increase production. I think when you look at some of these companies like Schlumberger, Exxon, Halley, as oil prices get higher, they should be participating from a top line point in revenue, because they become much more profitable as oil prices go higher. We haven't seen that yet. Quite confusing as to why that hasn't translated at this point, but it's something that we're going to have to continue to look at if oil gets above 70 and stays above 70.
All right. Jonathan Corpina has been on with us. He is the Senior Managing Partner at Meridian Equity Partners. Jonathan, thanks so much for your time today, and have a good one.
Gentlemen, have a great day. Thank you.
All right.
All right, S&P futures are on absolute fire here. We're up 1175 at 28.2375. We took out that major resistance, the two highs from last week at 28.18 and a quarter. Really getting into a thin resistance area, folks. Really not seeing anything up to your February second high of 28.3975. I guess on a pullback now, if you're looking to buy this market on a pullback, got to hope a pullback to those old highs at the 28.18 area. That's what I'm looking for, support and resistance here in the S&P futures.
Go back to the earnings parade here. Let's go to Verizon. It's even getting a pop. I mean, it's funny. This day, it's like almost every single stock that reported is trading higher. There's a couple exceptions, which we'll get to, like Whirlpool, but Verizon here trading up as well, Spencer. Details.
Verizon with the Q2 EPS of $1.20 versus $1.14 estimate, sales 32.2 versus $31.74 billion. So they beat on the top and the bottom line in the Q2, and their growth guidance came in line with estimates. So
good enough here for Verizon.
Wow.
Likes the 4.5% dividend. I don't know. I'm still a fader of this rally. I mean, it's a nice pop here. It is on earnings. I said I didn't like it yesterday. I don't like it even more here now because it's up another $1 higher. So I just think long-term is competition in this industry. I think it's a great opportunity if you're long this thing to lighten up or get out. That's my opinion.
Yeah, it's a very big move for a thick stock. Let's see what happens at the $52 area, 52.24. Has been, 52.29 is your high in the pre-market session. I guess as long as you hold 52, you got a chance to test that 52.29. under 52. I mean, not a lot of support until you get to the old double top, or actually it was a triple top at the $51 area. So if I was looking to bring this in on support, it'd be at 51. Trying to support a resistance, it'd be at your pre-market high, 52.29. Pretty big move here for Verizon.
Yeah, huge move for it. AT&T getting a little sympathy move here. It's trading up 30 cents, but you want a dog chart this AT&T. I think you got sellers.
Oh, yeah.
So much overhead supply. You're getting a little pop here. It's, in with obviously Verizon here. It reports tonight after the bell. So maybe you can get some life here, because it reports a bit, but just a lot of people who are underwater in this stock. And I think every time it pops up, it's going to be met with more sellers. So I'm a seller of pops in a stock like AT&T.
Want to move on to like Whirlpool, for example? One of those.
Let's do it. This is a disaster stock of the day.
Yeah, this is the one that is getting hit, like that you teased earlier. WHR Q2 adjusted EPS of $3.20 versus a $3.73 estimate. Sales 5.1 versus $5.33 billion. So they missed on both those numbers. They also cut their fiscal year adjusted EPS guidance by 30 cents on the low end of the range, from $14.50 to $14.20. Again, that's the fiscal year EPS that got cut.
Stock down $14. It's a mess. It's taken out all support from everywhere. You go to the weeklies. This stock has been a mess for a long time. I mean, we were $200 back in 2017. Now we're talking about stock 136. So you're basically 33% off the highs here now. You got to go to the monthlies really to find levels here now, because we've taken out the 2016 lows here.
Yep.
Now we're going back to 2015, and Joel, find you some numbers.
I am having a hard time here. Your pre-market low stands at 134.51. Buyers have stepped up $2 from that level. So if you're looking for a potential long or a potential place to cover a short, you did find a lot of buyers under 135. So it's one of those sleepy charts in the pre-market where, you took the initial plunge. Buyers and sellers are squaring off here, but definitely finding some support. I mean, go on the monthlies here. You got to go all the way back, not that far back. If you're looking for more, in February 2016, had a 128.24 low. I don't see that. I think you get a little bit of a pop off the open, off this. At least if shorts are coming, right? If you come in short this stock and you get this kind of move, are you selling more down $14, or are you bringing some in? Yep, probably bringing it in.
So many other big companies that report. Let's go to Biogen. It's trading up enormously again. The stock's been a monster. I still have in my long-term investment portfolio. It's been a good one. We are now. We're way above the highs from even when they announced the positive results from their Alzheimer's drug. Stock's trading up $20 here in the pre-market. They must have blew it away.
$5.80 versus a $5.21 estimate. Sales $3.4 billion versus $3.25 billion. So they did beat on the Q2 numbers. They also acquired a muscle enhancement program from Allevigen for $27.5 million. And there we go.
I mean, this is growth at a reasonable price right here too. And it's obviously up significantly from where it was just a while ago. And I probably wouldn't buy it just because I still think there's 50 or 60 points of fluff, because I do not think, unfortunately, that Alzheimer's drug is going to get through phase 3. And then you're going to have eventually a 50-point plunge from that. But that's a long ways away. So can you ride this wave? Sure you can. There's going to be buyers on all pullbacks here now. So I think, you get back to 268, 270. I think you find buyers there now where that old high was. So stock's off to the races. We are still off the all-time highs, but it's on the radar here now. I mean, we got up to actually, it's not even on the radar. No. We got up to $480 back in 2015. That was where everything turned, and biotech obviously went into a bear market for a long period of time. It is starting to come back. Biogen is coming back. I'm sticking with these stocks. I mean, there's so much. If you want value, and there's some growth there too. I mean, all of these stocks kind of fit the bill.
Yeah, look at this. Your pre-market high comes in at 382, so you can use that as a potential target on the upside. What I think is most interesting about this chart, and I haven't played Biogen because I was in the camp with you, Dennis, about it filling that gap. But when you had the good news on that the drug trial, you had a low at 340.55, and man, it flirted with that a few times, 340, 339.15. But if you were only going on a closed basis, it kept you in that stock, and adding another $20.50 today. Going to the monthlies here, there's just not a lot. And I don't know what happened to this thing. This was back in July of 2015, where you had a high of 412.24 and a low of 299.76 in that disastrous month here. So now you're getting back up. Can't say the 412's on the radar. If you feel like you need to sell today, I'd use half and whole numbers, increasing your size the higher the price goes.
Let's go over to
Joel wanted to go
how about
to
Celgene?
yeah,
Let's do Celgene.
Joel wanted to go to
drug
Celgene.
news.
Yes.
Celgene, yeah, they also, by the way, I should mention, have earnings on Thursday. But the news this morning for Celgene, they announced phase 3 study of Augment is the name of the study, and met its primary endpoint. I'm not quite sure what this drug does, to be honest with you, but meeting the primary endpoint on a phase 3, which
we're seeing that it seems like every other day from Celgene right now. Like, they had a couple drugs that missed their primary endpoints back, and this was the whoosh, from 140 down to 120, and they had a bad earnings report as 100, and then had another headline that it missed. And it's funny, they get these drugs that meet primary endpoints, they go up $1. They miss primary endpoint, they go down 10. So the market's very mean to Celgene, very mean to my portfolio. It's one of the biggest positions in my investment portfolio. I still like it. I think the valuation is crazy cheap here for Celgene. So long term, I'm sticking with it. I think Celgene's still going to be one of the players, long-term players, a decade from now. And that's why I'm sticking with it in my long-term investment portfolio. But it's been out of favor. They're starting to come back into favor. If you could ever get above that whole, like all these highs we got around here, 86.15, 86.20, 86.25, we've been up that in the pre-market. Let's see if we can get above there. Maybe the catalyst is earnings. It's going to take us above there. But it's one of those stocks the market just likes to beat on. So I'm always scared going into an earnings report with Celgene.
Sellers were congregating 86.15, 86.12, and so this whole $86 level has come into play in the last 9 sessions. So buying it on the cheap. Let's see if we pull back to 86 here. That old resistance will be new support. Also tested this area back in May, but if you want another daily high, another target to go on, you don't have a whole lot. You have a close on May 4th at 86.89, but the high on that same day was 88.88. So not much as far as resistance. Holding 86, I think is key to continued rally here in Celgene.
Lockheed Martin trading up $8 on their earnings report. Just like every stock I look at that report is trading up $5 or $6 or $7. So LMT, what'd they do?
Q2 EPS $4.05 versus a $3.91 estimate. Sales $13.398 billion versus $12.73. So they beat nicely on the EPS and sales for the Q2, raising their fiscal year sales guidance by a little over $1 billion, from $50 billion to $51 billion and change on the low end of the range. EPS for the fiscal year also getting raised a lot. $15.80 was the original. $16.75 is the new low end of the fiscal year EPS guidance.
Oh, they make money, man. They make money like crazy. 330, that's a struggle back in May. Twice you got up near that area and failed. Can we get up there? I think we're going to test it today. Can we take it out? That's the question. Takes it out, it starts to open up a little bit more, but I think that's your first bogey. If I was long, I'd probably be a little nervous around that 330 level.
Just under that, your pre-market high is at 328 even. And then Dennis was mentioned a pair of highs that you had right at 328.55, 329, call it 330, your whole area. If you're trying to buy this on a pullback, the top of yesterday's range was 323.50. You had a few other highs in there. So if you're so inclined to short, you're looking for a gap fill. There you go, 323.50.
Let's go over to the hog, because everybody expected hog to miss. I even read an article on my Twitter feed there yesterday saying how the terrorist concerns and hog was, probably going to disappoint here. So expectations were epically low for HOG. I haven't even looked at the numbers yet, but I mean, if they were going to say anything right, it was probably going to rally. How did Hog do?
Q2 adjusted EPS $1.52 versus $1.34. Estimate sales 1.71 versus $1.41 billion. So they beat on the admittedly low expectations, like you said, for the Q2. Their shipments guidance for the Q3 and the fiscal year was, I think, higher than people thought.
So stock's getting a little relief pop. It's very out of favor. I don't know. Like, you got so much overhead supply here too, though, and it still is out of favor. And they're worried about the tariffs going forward. Lots of things for investors to be worried about here. So I'm probably not a believer in the pop just because it's been out of favor. And it's hard to, I see highs at 43s, highs at 44s. I mean, I just don't see any reason that I need to be jumping in here because Hog's turning it around. I think it's more of another chance for people to lighten up.
Yeah, I mean, you got up near, you stiff $44 with a $43.95 high, but you already have backed off a buck over that. So I would look for sellers if you approach that level. Also, you have a triple top here right at 44. So that's just below the pre-market high. Got a lot of people underwater on this one. So already fading off the pre-market high. In order to fill the gap from yesterday, you don't have that. You got about a buck to go. The high of yesterday's range was 41.89. You had a 41.96 high. So let's call 42 support and that major resistance at 44 here in Harley-Davidson.
Let's go over to, there's so many on the list. 3M. We didn't do 3M yet. Dow component here. It's actually in the red. It was in the green. It's funny. It was trading the green. I don't know if he said something on the conference call, but it's turned to the red here now. Give us the numbers, and Joel, break down the pre-market action because this one went from bliss to, I can't say the other one.
The earnings per share, $3.07 versus a $2.59. Estimate sales, $8.4 billion is in line with the estimate. They narrowed their fiscal year EPS guidance. They didn't raise or lower. They just narrowed the range by 10 cents, and that is in line with the estimate. So nothing crazy as far as the earnings or guidance is concerned. So maybe this has said something on the call.
What a range in this. You got to pop up to 206.30. That's history now. We're trading in the red. We're trading at 194.72. That's down $4.12, folks. If you've been waiting to buy this thing at the lows of the move, this recent move here, you might get a chance. You had a 193.51 low on July 2nd. That was flanked by a couple other lows right at 94. 194, we're coming right there right now. We just actually, what did we just print there on that one? 190.
Did they say something? Like, why did this turn so hard? We got to 206, and now we're just in a free fall here. Like, was the conference call and something said?
Can't listen to the call since I'm out with you guys.
But no, I know. I'm just wondering if anybody else can help us out here because something had to be said. I mean, it was trading in the green. I looked at it, was up $3-4. I was like, even 3M is up, which has been a dog. I guess every dog doesn't have its day here because it looked like it was going to be okay, and whoosh.
Yeah, I still like the 194 area just from a technical basis. Also, before you started a big run in May, you had a 194.06 low.
It's testing right now.
Yeah, it's right there right now. Below that,
I'm torn here, Joel, too. Just want to say, because Philip Morris was interesting, and they annihilated Philip Morris on their initial earnings report, and they knocked it down. It's down to almost $6. Woo. And it came back in the afternoon, and it came back hard. So I don't know why that was, but this is, it's not the same. Obviously, big difference, 3M tobacco, but they're more consumer staples. It's more a defensive name. It kind of fits in that description. So, it was a little bit of a tell, Philip Morris. I would say, if I didn't see the Philip Morris, I'd say this thing's going to continue to leak. But because Philip Morris bounced right off its old lows, Joel's making a point there. Maybe down to, I don't know if it's going to be 194, it's going to be the 192. The whole low of the move actually was back at 191 back in May. I mean, you do have support down there, so maybe it does bounce. But, this thing's in a free fall here right now, and I don't see any reason we got to go out and catch the falling knife right now.
Now getting a little that 193.53 43 tick. That was real quick, and now you're back up. We'll see if the buyers can settle in here at 194. I just wanted to answer Greg's question here in the YouTube chat. He was asking about Bank America. And while the market was selling off yesterday, I was just looking at these banks, and they were just green candle after green candle. Incredibly strong here. I mean, you're bumping up against 31. I mean, if 31.14 was a high in May 22nd. Maybe look at your open book and see if there's anything there at 31. And can you see if there's anything in there?
I'll go check it out. But they're back in favor. The buy and the pullbacks on all these. So I wish I would have been actually. It's funny, in the chat there, I was like, I stopped being bearish the banks about a week and a half ago, but I was like, I can't bring myself to get bullish. Wish I would have turned and got bullish, obviously, because it's been straight up. It's huge. 31. There's 400,000 shares offered at 31 on Bank America. So that's going to be your first test. Can you take it out? What kind of volume Bank America does? Probably can. But that's going to be the first test, at least in the pre-market. I mean, I think you're not. I don't think there's no way in the world it could open over 31. It's a matter of when the real volume comes in, can it take it out? That's going to be your big test, $31.
Okay, I will take a look at if we can clear through 31. You have a trio of highs at 31.23 to 31.36.
I will say banks a little bit lagging here this morning. So, always about rotation, and the banks have been doing their own thing. So TLT is kind of trading flat. That's not going to be a driver here today. It was definitely a driver there yesterday. I'll tell you what moves the banks is TLT. When TLT is trading down, the banks always seem to be trading higher here. So just keep that in mind. TLT got destroyed the last 2 days, and it's not surprising that the banks showed a lot of life. There's just that inverse correlation with the TLT. TLT is flat right now, so you don't have that driver that you did yesterday. But, with the TLT trading down a block yesterday, it was a huge move. I mean, look at the TLT chart. The last 3 days, it's like, boom, boom, you just collapsed what you did in a month. And I mean, if you put that Bank of America chart and reverse it on the TLT, it's pretty much identical. So you can see what's moving banks. It's interest rates. And if there's, the TLT starts getting hit, obviously banks are going to be trading higher. So that's your, what you got to look at there. TLT rallies hard, that's bad for banks. And the XLP, which is your consumer staples, and the XLU usually moves along with the TLT. There's a positive correlation there. So it's not surprising the XLU showed some weakness there yesterday with the TLT, but not as much weakness as you think. So it was kind of, this market is still, and even looking at this market today, Joel, I'm looking at, across the board here, I'm struggling. Besides the 3M and the couple of stocks that disappointed, really struggling to find losers here. I mean, there's just green everywhere. Oil's way up. The banks are trading a little bit higher. Tech stocks are taking off, obviously, because of Google. And then you look at the financials, some of the Caterpillar, Deere are trading significantly higher here. I mean, the only thing I'm really seeing weak is the earnings stocks, and that's 3M and Whirlpool. Besides that, I don't see much. So you got to think there's going to be some money that rotates out of something. What is that weak sector going to be? I got to think I'm going to lean on a little bit of consumer staples here. So I know Procter & Gamble, Coker up a bit in the pre-market. I'd be cautious with those ones. I wouldn't be surprised if money flows out of those, especially if we're going to have a risk-on day here. Money seems to flow out of those sectors.
Before we move on with the slew of earnings reports, Amdal is asking our thoughts on Tesla Motors here. And what a move yesterday. I mean, off the news, they hit it, and it got under 300. I was looking at like 294, 295. I was a little bit early on that. We got all the way down to 92.86. And that was just a new low that coincided. Where was that 292 low? Boom, boom. Oh, you had a 93.55 low on June 4th. Now you're back over 300 here. I'm watching that closing price from yesterday, 303.20. We're trading up 280 in the pre-market. On a pullback, I think that's going to be your support. You hold that. You got some room to fill the gap here. But really, what you did yesterday is you extended the lower end of a trading range that you've had for the month of July. Dennis, any thoughts on Tesla?
I mean, the chart looks broken. I think there's sellers all over the place. When you get to 310, 315, you're going to find sellers here now, especially up at 320. So I think path of least resistance is probably lower, but the buy the dippers are relentless. We had the ETF conversation there yesterday. If you didn't listen to it, I'd suggest go back and listen to it. I was just arguing that, people, every time they launch a new ETF, they're looking for growth. and they're still giving you top line growth here at Tesla, even though it doesn't make any money. And there's ETFs are just buying the stock, and I think that's what supports it up. Valuation makes zero sense to me. But maybe if you think it's eventually going to grow into that valuation, it's got to grow so much to grow into that valuation that I just think, if you think it's more than a car company, if you think Elon Musk is going to change the whole world, and this is your investment into Elon Musk, then I guess that can make sense. But it just makes no sense for me, as an analyst, as a chartered financial analyst looking at and crunching numbers. I'm nothing to crunch. And the company is burning cash so fast, it's tough. So, but that being said, the buy the dippers just keep coming back into it. So
320 needs
it can't stay down.
Nope.
So you're fighting the tape. You short this thing, you almost feel like you're always fighting the tape.
Real quick before we go on again, Matt and Beyond bringing up a nice chart here. Bring up DOCU. This is a newly IPO'd stock, had its nice run up, came down, is consolidated. You found a major buyer at the $52 area. Now look at all these tops here, right at 50, at 57. So I would say the top of this range, 57, this thing is really gearing up, but at a tight trading range. Respect the top of the trading range, but definitely get consolidation.
That's a big move yesterday. This sets up for a 2-day, guys. I like that chart. I think this sets up well. I think you're going to test it maybe today, get up to that 57.27. So I think there's $1.50, maybe even today in here. Question is, can it take it out and continue to go? These are the kind of charts that continue to go. You've got support. You have finally a good candle here. You are up near the top of the range, which is somewhat concerning. We've been up here before, but we've got a lot of positive momentum going for it. So let's see what it does here. If it can test that higher end of the range, 57.27, take it out, it could continue to move. So I would not want to be short this issue, and I would actually lean to be long it.
Yep, I have to agree on that one. Especially you want to get back to some more earnings.
Do we hit KMB yet, Kimberly Clark? I don't think we did. Let's go.
Yeah, do it. That's another discipline. That's consumer staples. It's showing its hand right now. It's market showing. I think you're going to see consumer staples week here today.
All right, KMB with the Q2 EPS $1.59 that beat by a penny. Sales 4.6 versus $4.63 billion. So a slight miss there. They're cutting the fiscal year adjusted EPS guidance, trimmed it by 30 cents on the low end of the range from $6.90 to $6.60. And they also lowered their sales growth guidance for the year by 2%.
And stocks trading down fairly significantly in the pre-market, down $3. We got to go look at the charts, and I'd say, you know what, this could test $100 here today. I'm not a buyer of pullbacks here because they're just out of favor. The consumer staples are not, and you can look at the chart from the last couple of years, continues to remain out of favor. I don't see any reason they're going to come in and buy this thing. So unless we see a miraculous return, or turnaround here in the stocks like 3M, Kimberly Clark, out of favor. This is a classic risk-off stock. So it's risk-on day, not a good day for them to be reporting. I think this thing tests $100.
You did? You think it does? I don't think it tests 100, Dennis.
I think it can. Why? Is it really consolidated a lot?
Well, it made a low at 101.49, and now we're $1.50 off that.
I think it can. I'm not going to do a bet on it. You'd have to give me a lot of odds because it's a consumer staple stock that doesn't move around a lot. But I think we can test $100 today.
There's a double bottom just under 102, 101.78, 101.84. You may have missed that as you went down to 101.50. So when I see three lows in a similar area like that, a nice whole number at 102, I think could be your first wave of support. Could definitely test $100, but I'm liking 102 here for maybe for some shorts to bring in some stock here. Not sure about initiating longs yet. The sector is definitely out of favor.
Dennis, with regards to 3M, the conference call isn't until 9 a.m. So this is just a classic fade.
Just classic that they popped a little bit, and there's just eternal sellers up there on these stocks there, and they're hitting her down. So we'll see. It's come off the lows there.
194.
Caution is the word here on all the consumer staples today. Yeah. So you look at your XLP, it's trading slightly higher in the pre-market. I think this thing turns to the red.
Okay, S&Ps are just backed off the high. High pre-market's 24.50, trading 22.75. Spencer, let's continue with the earnings parade.
Where else would you like to go?
Well, we could go away from earnings here for a second.
Sure.
There's obviously other stuff too. We've had a few ratings we could discuss. We had Whirlpool just chasing Longbow, downgrading it. But in the steel sector, we did have Steel Dynamics report last night. You got Nucor getting an upgrade at KeyBank here. I want to start with Nucor here with the upgrade because I own this in my long-term investment portfolio. It has been up near the $70 multiple times. I never sell it. I just hold on to it. But every time it gets up there and then it goes back to 60, I was like, why didn't I sell it at 70? So I'm going to get maybe another shot here today to sell it up in the 68 or 69 handle. And I probably won't sell it because I've just had it in there forever. But I mean, this has just been such a wall of resistance up at $70 for a long time. So we're going to get up there. We're going to test it again here. It looks like maybe as much as early as today. Anyway, upgraded KeyBank. They're upgrading, I believe, to overweight. And then you also had Steel Dynamics. We can do these together. STLD reported earnings there last night. Spencer, give us the Steel Dynamics numbers and when we'll talk steel.
Steel reported, let me pull up the number real fast on my pro. There we go. Q2 EPS $1.53 versus $1.49. Estimate sales $3.1 billion versus $2.89 billion. That's pretty much it. Yeah, that's it.
Stock trading up. If I was Steel Dynamics, I'd think $50. Big round psychological number. What does it do there? All the steel's trading higher. X is up in sympathy. Nucor is up in sympathy with that, and then Nucor has the double up because it's getting upgraded as well. So that's your steel stocks. What are your thoughts here, Joel?
Steel Dynamics breaking out 48. I would have been loved to catch that thing going through 48. Long consolidation after the drop. $1.24 away from there, so that doesn't do you any good unless you want to buy on support. If you're bringing a short, you better get your bids out there. 48.10, 48.15. On the upside, you mentioned $50. 49.59 was a high to contend with. And then you talked about the psychological 50, 49.91. And then, I don't know. I've seen these stocks, though, and like Nucor, I've seen it like have these opening, these big opening moves and have a hard time holding them. So just be aware 3 days ago, this stock was at 63.34, $5 move, pretty unusual for it. 68.84 was your May 15th high.
Let's jump. Other ratings changes. We got Mosaic catching an upgrade at Bank of America. GOOG downgraded RJ. That stock still, I think, going down forever. Mosaic, let's go MOS.
MOS, that sector, let's see here, trying to break out here, up $1.12, 29.50.
A lot of resistance.
29.90, 29.95. If it clears 30, then you're in good shape. But keep an eye at that double top, 29.90, 29.95. Dennis, we have a few minutes left here, but I just wanted to address something here from Linda, Texas Linda. She said she's been doing analysis on the pre-market jump versus the open price. Dennis, your thoughts on that? It's probably something we could talk about for like an hour. But I guess with New York stocks, it's a little bit different because you have the book and you can see the liquidity. I'd like to make any comments on that.
I mean, you have, you can hit the NASDAQ book and you get the ARCA book, but the one thing is the primary market on the NYSE stocks always seems to gravitate, at least, in the pre-market. You can get a lot from looking, at the book. But it depends on, you can do a lot of analysis. Like when me and Joel really follow pre-market action, we often say a lot of, the pre-market highs, the pre-market lows will coincide with what they do intraday as well. Because if you've got an institutional algorithm, they might be selling a pre-market and maybe it stalls out there. Well, that same algorithm might still be selling it. They just want their price. So they'll take a pre-market, they'll take it, during the session, they'll take it after hours, they'll take it whenever they can get it. So if you can, identify, big fish there, somebody that's selling stock, maybe that's where it stalls out. That big fish might still be there during the regular session as well. That's why a lot of times the pre-market highs coincide with where the stock is trading, the highs in the regular session as well. So we really note the pre-market action. I think a lot of people don't look at pre-market action, or they just discount it and don't even consider it. And I think it's a mistake. I think that's why we have a huge edge. And I think that's why I've been consistent as well too, because I really watch where stocks are topping on the pre-market. Sometimes you'll see a stock, trading pre-market at a certain price, and then the open will happen and it'll open away from where that was. A lot of times the stock will want to gravitate back to where it was pre-market. So that's, again, a more of a fair value trade. If the market's valuing something at 830 around a certain price, then you think, okay, well, maybe the market's going to, turn around here or, go the other way. So I just got trades going on here too. So
okay,
it's a bit tricky, but I'll just say, it's a good point to watch pre-market action. And I think a lot of times that can dictate where the stock goes in the regular session as well.
And also check the volume, Texas, Linda, because sometimes it's just these odd lots or an off-exchange trade or a cross in the following day, and someone just painting the tape. So a lot of it has to do with volume, especially with New York stocks. If you have big sellers in the book at whole numbers, not that much stock is traded, then you have to put a little more credence in it. If it's, a 250,000 share seller and 1.5 million is traded in the pre-market or after hours, then much better probability of taking it out. I just want to mention Visa and MasterCard here. Both are trading in the green. Both are trying. It looks like they're going to make all-time highs. I will just, for MasterCard, just be aware 209.19 was your all-time high from July 12th, and you're opening into that. And then Visa, look at 4 days of tradetherange.com here, basically from 140 to 141.50, attempting to break out 141.47. That was your high on Friday. That's the all-time high.
All right, that's going to do it for today's show. Thanks, everyone, for listening. Thanks to Jonathan Corpina for stopping by today and joining us for a few minutes. Thanks to everyone in our chat on YouTube and premarket.benzinga.com. Hope you guys enjoyed the show. If you want to catch the podcast or any part of the show again, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just rewatch the show on YouTube. Thanks again. Hope you all have a good rest of your day, and hope you join us again on Wednesday.